Okay, I'll start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So we are into the last week of the month of Jan, and I'm going to present here on Monday, the 26th of Jan, the Asian Session Live Market Analysis webinar. So here we will see the derived forecast for this week and also the market reading, how exactly the currencies are trying to behave during this particular time frame. And also we briefly discuss about the trading strategy during this sort of extreme moves happening in the market. Now, you know that on Friday, for the week closing, they quickly gained the levels in the case of Euro and GBP, inducing the last minute short sellers to do the short covering, and then started making the slide on Friday, and then they continued the slide today on Monday. So now you find that Euro is around 31 pips negative net change from that of Friday close. And you find USDN is also showing negative net change. So here you come across that both Euro as well as USD-Yen are showing negative net change as a contrarian move. Euro is showing the USD gaining move, whereas USD-Yen is showing the USD weakening move. Besides, GBP is showing USD weakening move by showing 8 pips positive net change. And in the case of CHF, which is showing the USD weakening move by showing negative net change. So we come across the contrarian moves at the moment. Then besides, in the case of Canadian dollar and Australian dollar, they are showing the USD gaining move. So Canadian dollar is showing about 31 pips positive net change, and Australian dollar is showing 27 pips negative net change as the USD gaining move. So you come across that USD gaining and the USD weakening move are happening in different pairs. And if you carefully watch it, that USD Yen and USD CHF are at the lower levels when Euro and GBP are dropping. So you know that when they made the drops last week, after the ECB, they just gained the levels and started making the slide. And that is mainly in order to do the contrarian moves and just to drop down in a big way. Euro Yen, already it's about 53 pips negative net change, and GBP nominally, and also the CHF crosses. So Euro CHF and GBP CHF, they have just made the big drop in order to handle the crosses. So ultimately what they do is, after handling the majors, they are coming to that of the crosses. Being the last week of the month, you will come across the monthly trend reversal moves. So far, till last week, we have seen the yearly trend reversal move. The yearly trend reversal moves are very, very aggressive moves. And we have seen how exactly they made big drops in the case of Euro, and also relatively lesser drop in the case of GBP. And after making the drop in the case of Euro and GBP, they just also made a big drop from that of 121 to 117, 116 in the case of USD-Yen. And you know that the 3,000 pips drop happened from 1.02 to 0.77 level in the case of USD-CHF. And so you find that during the yearly trend reversal, they just repositioned the levels, and none of the platforms gave any definite fill during such time, and they made such big drops, and afterwards they are just making relatively USD gaining and USD weakening move. So when Euro is making a drop of 28 pips, we expect USD CHF to gain at least 10 to 15 pips, whereas it is also showing negative net change. So that is how they are trying to handle the yen crosses and the European crosses. Afterwards, they are going to make big moves in the case of the majors as well. So this is the last week of January. So till last week, we have seen the yearly trend reversal. From now, you will come across the month-end trend reversal move. That is the monthly trend reversal move will come across during this week and the next week. That will be the month beginning trend reversal time. So when compared to that of the yearly trend reversal, the monthly trend reversal moves will not be such big moves, and the volatility will be relatively very less when compared to that of the yearly trend reversal. So we may come across an extended stop and move for about 60 to 70 pips, and then they will reverse the market. Don't expect them to make a very big drop during this particular yearly, monthly trend reversal time. So ultimately, the timing is very important for us to follow. On the levels, they may show variations depending upon the traders taking positions. If predominant of the traders are holding long positions in the case of Euro and GBP, afraid of taking any sell position, then they continue to make the drop and induce them to liquidate the long positions. And everybody will be questioning who is buying it when the entire market is willing to shed the euro positions. And that's some fool who is buying such euro positions. Basically, they are the long-term traders, basically the players. So those players induce all other traders to liquidate the long positions by creating extreme bearish condition. And also today, everybody is waiting for the Greece elections. So every small news or any event, they will try to magnify and induce the traders to stand on their toes with tension. And then subsequently you find, depending upon the traders taking positions, buy and sell positions, the players will try to make the swings and continue to make their own way the moves. So always we know that they create the market sentiment and act against that of the traders. And this time you would have noticed that they just created the bearish sentiment and continued with it of the bearish sentiment. And that is mainly to make big drop in the case of the majors as the USD gaining move as a result. So anybody who is willing to buy Euro and GBP was forced to liquidate the long positions, and anyone has taken a sell position after the drop, they are given the profit. So which will create the bearish feel among the traders. So the traders will think that it's better to go in for a sell and buy trade in the case of Euro and GBP because they continue to fall. Probably one day it might come to zero. That is how they develop the market feel and then try to take any pullback a sell position. When the going is good during the lower level consolidation with frequent downward stop, and you find that the traders try to take sell positions during small pullback and then they make a small drop, then which will induce the traders to commit more of a position in order to grab the maximum profit. When the traders commit more positions, the players can easily see how much of selling is coming in the market, and accordingly, they can avoid making a drop so that when the predominant of the traders take sell positions, they avoid making a drop and start gaining the levels. So when they start gaining the levels, the traders who have taken the sell positions are forced to average their sells by taking further sell positions. So slowly they gain the levels. And then after the traders take beyond their capacity, their sell positions, they make one upward spike using some trigger or the news or whatever it is. And then you find such traders come for a big short covering. So in a small sell and buy trade during the lower level consolidation they would have made, and such profit they will take it in one go when they make an upward spike and simply say that hereafter was no more USD gaining move and it is going to be USD weakening move. So that is how they try to change the market sentiment. And you know that last time they used the Greece confusions, and then they said that euro is going to collapse, and then everybody was afraid because fundamentally everybody was feeling that there is going to be a chaotic condition in Euro Union. But subsequently what happened? From that of 1.23, they straight take it up to 1.40. And everybody was surprised when the US data was positive and European data were negative. They are continuously gaining the levels in the case of Euro and GBP. and afterwards they induce the bullish feel when euro was around 1.3839, 1.40 level, and induce the traders to buy. Then afterwards they continue to make the drop now, and they are doing the reversal at the lower level. So when the traders were shorting at the higher level, they continue to gain the levels. So the traders were shorting from 1.34, they took it up to 1.35, 1.36, 1.37, 1.39, 1.40. That is how they took it. So all lost their hopes of making money. So they've gone for an extreme short covering at the highest level. So this is how they make the one-sided moves and quick moves in the market. Thereby, you find when there is a net change of about 150, 200 pips, immediately the traders become panicked because the usable margin in their account gets reduced, which gives the trigger for them to become afraid. So that is referred as the market fear. So once they develop the market fear, they always try to go in for crisis management. In the process, they go in for short covering if they are taken the sell positions at the lower level, or they go for a long liquidation if they are taken the buy position at the higher levels. So that is how you come across the traders are forced to book loss, and all the losses of the traders and the institutions' losses become the profit for the big players because they trade with the huge positions, and later on they try to share the profit with others, those who are supporting their activities. So we try to trade following the forecast algorithm, which indirectly give us what could be the possible moves the players could make. So we follow the timings of the players, what they use for their market moves, and also the early and the late sessions. We try to find out what they will do at dip during the early session, firm up during the late Japanese session. Then swing and firm up. They will just make a higher level swing and make further rise. And then they will start making the slide during the US session. That is going to be the forecast for today. So you follow the forecast on each session and find what they are trying to do. And then accordingly, you do the swing trade during that particular session. You'll be really in a position to make some money. But still, during the trend reversal time, the players can suddenly reverse the market. And depending upon the traders taking positions, when the traders become bullish and take higher level or buy after the rise, they don't make further rise and drop and induce them to liquidate the long positions. And similarly, after the drop, when the traders take sell positions, they don't make further drop and then they try to gain the levels using some story and induce them to do the short covering. So ultimately, the herd of traders, how they are committing positions is vital for the market moves. So they are all being envisaged by that of the algorithmic study, and which is giving the expected market moves for this particular week. Till weekend, I have given it, and you can find out how exactly they are expected to make the moves in each session. And also if there is a drop and then swing and rise, probably during the drop you can buy and book profit during that of the late session, late US session rise on Tuesday. That is how you can identify the type of trades, what you can do it. And on Wednesday after the rise, you can take a sell and then US session slide, you can book profit. So without any bullish and the bearish feel, you try to follow the forecast algorithm, which will be able to give a greater understanding of the market, how they are expected to make the moves. But still, the market can make its own move or deviate from that of the expected market moves. So there is no point in blaming me because I'm just making all my efforts to give a more accurate forecast. But still, the market can deviate. In that process, what you have to do is use the hedging order to limit the risk and try to capitalize the situation. If the market goes against, immediately hedge the position, whatever you have, and book profit on the hedge side. And then subsequently, the next time when they rise euro, you book profit on the buy side. That way you can try to do it during that of the monthly trend reversal time. And next week, it will be 2nd to 6th of February. That will be the month beginning trend reversal time. So you try to understand that they are expected to make the volatile moves in the market during that particular time frame. Now, coming to that of the levels in which they are expected to make the moves in the market. Now, suddenly, if you notice that in the platforms you come across during start of the day, they just showed 1.109998 and things like that. So they made a big downward move from that of 1.12. Actually, this 1.1374 they are showing is not seen in the market, in the platform. So in the quote page, they are showing it, but which is not actually seen. Actually, the market was around 1.1201. From there, they made one quick drop of about 100 pips to 1.11 and slightly below that 1.11 by 1 or 2 pips, and then subsequently gained the levels to 1.1175 and now holding it. So which is an extended stop during start of the day, and then subsequently they gained the levels. They are expected to firm up as per that of the algorithm. Then you come across the GBP. 1.4988 is the low and 1.5029 is the high, and they are expected to gain the level, do the lower level consolidation and gain the levels during this particular week. And in the case of yen, so to everybody's surprise, when euro and GB were dropping USD yen, also they dropped it. And so that way they are able to make a big drop in the case of yen crosses in order to induce the long holders to liquidate. Because when euro and GB were initially making the drop, they took USD yen up to 122, close to 122, and induced all the short sellers, those who had technically seen that there is a great short selling potency, they just took the sells. And then the players continue to gain the level in the case of yen crosses, induce everybody to go in for a short covering. Then afterwards, they dropped it in a big way, USD yen, when euro and GBP have dropped. So ultimately what happened? Yen crosses crashed in a very big way. So this is the way during the year end or the year beginning time, they make the moves as the yearly trend reversal moves. So we should be prepared to accept such moves. And here in the case of CHF, it came down to 0.77 and then around 87 level they are holding it, and slowly they will gain to 92 level and then above parity. And you know that everybody was talking about the disconnect the SNB was announcing with regard to euro and euro CHF. Swiss National Bank was not interested to peg it. But actually speaking, there was a statement made by SNB, but they were not really monitoring it. But the players were holding at the at 1.02 level in the case of Euro CHF and induced everybody to take buy positions around that and telling that there will be a spike on the upside. And so many people have thought that since SNB is going to intervene, there can't be any drop in the market. So they took positions and expected USD CHF to go up and also euro to go up. As a result, that euro CHF will also go up substantially. But what the players have done it, they simply used that announcement as a trigger and dropped USD CHF. And now everybody is of the opinion SNB is not interested in intervening. And later on, what will happen? No, they will simply say, because these sort of stories we have seen in the case of yen and other currencies several times. So later on, they will say, if needed, we will enter into the market. Then immediately USD CHF will spike up in a big way. So this is the normal story. So we should not become fooled again and again. Anyhow, now they are trying to gain the levels in the case of USD CHF to that of 0.92 in this week. And afterwards, yet another country wherein they made one-sided gain in order to induce the short sellers to go in for a short covering in a big way is USD CAD. So from that 1.18, they straight gain it up to 1.245070, etc. And they are holding it at a higher level. So from there, they are expected to make the slide in the case of USD CAD and in a big way. And you know that they normally make such one-sided gains or one-sided drop during that of the trend reversal, yearly trend reversal time. Afterwards, reverse it in a matter of about a month. And you know, even the multi-year trend reversal, they started doing in 2008, in the month of September, October, November. And in a matter of 2 months, December, January, February, they've gone to the extreme bottom. So from that 1.60, they took euro to 1.23. And in the case of GBP, from 2.11, they took it to that 1.35 in a matter of about 2 months. So always they take a longer time to gain the level, induce the traders to become bullish and take the buy positions at the highest level. And to drop, they withdraw the support. As a result, the market develops the free fall. And in that process, everybody will become jittery. And everybody will be thinking that how exactly such the government agencies are going to withstand such pressures. And these are all a collaborative game. So ultimately, they also make huge profit when the traders lose money. And that is how they make money in the money market. So money has to become multiply with more money only by cunning process. And in a normal way, the money has to be converted into effort because you have to open a shop and make investment and keep some goods to sell. And later on, you can sell those goods with a profit and earn money. So money has to be converted into effort, and that effort has to be converted into money. Then you make some small gain. Whereas if the money has to earn money straight away, like a tree growing money, then the only way is make all cunning activities in the market. So these are all the levels in which they are expected to make the moves in this particular week. So lower level consolidation with downward stop and in order to gain the levels. So technically you might come across that it can drop further down, further down, further down. But my humble suggestion will be avoid becoming bearish, and you can keep away from the market and see how exactly they are making the moves and finally how they are going to trap the traders. Later on, you can do the buy and sell trade rather than putting your money in the sell and buy trade and get caught vulnerably during such extreme moves on the upside. So in the case of USD CHF, they made a sudden move, and you know that many of the platforms, they simply closed the accounts of the many traders. So that sort of situation, you should not get caught. So avoid it. That's what my humble suggestion is. Now, with regard to the initial lows and the highs, that's it for the day. So Euro has not breached the low or the high. GBP has also not breached the low or the high. And USD Yen also not breached the low or the high. Then USD CAD, USD CHF also not breached the low or the high. And USD CAD also not breached the low or the high, and also Australian dollar. So as a result, you find that none of the currencies either breached the low or the high. They are only making a small swing. They just initially started with a knee-jerk reaction in the case of euro, and all of the currencies are making a nominal move, but still they are making the contrarian moves in the market to handle the crosses. And later on, they are expected to make volatile moves during this week and next week, and substantial gaining moves till August. We could see from that of second week of Jan. This is time the market is expected to make either way big moves. So whenever there is a quick downward move, you buy and book profit during the upward move. And you can do sell and buy trade provided you use the hedge order and try to keep stop at entry as soon as the position makes profit and quickly grab profit. And don't become greed and expect every time a big drop to happen to book a substantial profit. They may or they may not. And especially during the monthly trend reversal, you cannot come across big downward moves. And this week, we come across also the FOMC to announce the interest rate decision. Everybody will be explaining that it could be a great event day, but you may come across that it might show a lesser volatile move when compared to that of the last week moves. Then you will be able to understand the difference between the yearly trend reversal and the monthly trend reversal moves. So always keep in mind when the market is near the high and not breach the high for more than 30 minutes, around that of the initial high, which we noted on around 3:30 GMT, you can take a sell. And then by end of that session, you can buy it when it moves to the opposite side. Always keep hedging order 30 pips above that of or below that of the market. And then once a position makes profit, you keep stop at the entry. Once a position makes about 20-25 pips profit, keep stop at entry and eliminate the risk. And then subsequently keep a limit order to exit around 45 pips. If the momentum is good, then keep about 75 pips limit order. You'll be able to see that the market could either hit the trailing stop, which is kept about 12 to 15 pips away from the market, or 75 pips or 45 pips limit order, so that your profit is protected. That way, in each trade, try to protect the profit and continue to trade. You will find that trading is a pleasure. And instead, if you think of taking more and more risk, you find the reward might be big, but the risk also might be very big, which at times close your account. And there is no bravery involved simply telling that I closed my account 3 times. And that shows that you are emotional, not intelligent. So use your common sense and use your market understanding and see that it's a hard-earned money. You cannot just like that lose it. It is not like spending. No, in the spending on the counterpart, you get some commodity, either you eat or use it for your comfort. Whereas in trading, you simply lose the money without getting any reward. And you may say that you just passed the time by watching in the market without taking position also. You can watch the market and just become emotional, or sometimes you can just do the trades in a demo trading platform and become emotional so that you enjoy such emotions without losing money. So simply continuously losing money, becoming bullish and bearish alternatively is of no use. And ultimately you will stand where you have started. And you have not come to the market with that objective. You have come to the market in order to earn money from that of the market. For that, you need to use predominantly your common sense, besides other market study parameters. So follow the session timings. Early and the late sessions, we try to focus on the majors to take positions and close position. And during mid sessions, so take in the Japanese mid session, your position in yen crosses or European crosses and book profit during that of the European mid session. Similarly, European mid session, you take position and close it during the US mid session. That way, if you try to focus on the trading in the case of crosses, you will be able to make some substantial money from the other market. So I take this opportunity to thank FX Street for the facilities provided. And also, you people who have come here to listen to my webinar, I'll come back on Thursday, January 29th, and review the analysis. In the meantime, if you've got any questions, kindly ask me. I'll answer to those questions. Then Muhi Hussain, Euro and GBP have bottomed now. Yes, they are bottomed. And see, during that of the lower level consolidation, they may do frequent downward stopping. Whenever they are stagnant, whenever they are simply holding the market, don't enter into the market. Only when they make some good volatile or a quick drop, at that time you buy. Once the new low is not been breached for 30 minutes, you take a buy. Immediately you will be able to see profit in that. That will be the smart way of trading. Then Jen has got a question. With GBP USD, do you see that, like in 2010, during that election year, that the year GBP will also go below 1.48? Do you think that this is the time 1.48 will be bottom for the year, and so a good long-term opportunity? See, there is a possibility to go to 1.48 because till first week of February, they can do volatile moves. No, going to 1.4948 is not a big deal. And so you follow the timings. I explained to you, they will be making the month beginning trend reversal moves during first week of February. Afterwards, whatever the level, and on the second week, on the 9th of February, they will be making week beginning false move. At that time, they will come down. Then you buy and do the position trade. You'll be able to really make very good profit. Then Mohi, can Euro go to 1.00? If there are plenty of stops below that of 1.00, they can just definitely go there and hit the stops, because ultimately the players want money. And showing the level or not showing the level is not going to give any reward to them. If there are plenty of stops below parity, and definitely they will take there and hit all the stops and accumulate the positions as well before making a big rise in the market. So I am not here to speculate whether it will go to 1.00 or below parity or that sort of moves. But ultimately what is more important is they have the time till next week to make the volatile moves and accumulate buy positions in the market. So do only swing trade during that time without imagining that it can go to parity and take a sell position. That sort of move, avoid it. They might happen to be emotional. That will be emotional decision. Okay. So there is a small correction with regard to a fixed rate announcement. I'll come back on 29th and I'll give the review of the Asian session live market analysis by 5 GMT, not the 8 GMT. Then what about Australian dollar? There is a question from Kialton. Aussie is not expected to fall in a big way. Instead, it is expected to slowly gain the levels, and you might come across before Euro and GBP gaining, the commodity pairs are expected to lead the rally and lag behind. Keep that in mind. That is why when Euro is dropping in a big way, Aussie is not dropping. Okay, thank you, admin, for correcting it. So still Euro and GBP dip and rise. Now GBP is lower level and Euro is at higher level. They will dip again before rise. Yeah, they will try to test the low again and again, so that those who are following the technicals will think that okay, it has gone below that of the earlier low, then we will go in for a sell. Lower lows, then sell, then they will take up. So okay. When you are able to follow English, they speak in English and cheat you. That's all. If you are following German, then they speak to you in German and cheat you. then you develop the trust. And that is the way, you technically see that lower lows and how the trend is identified. Okay, lower lows and higher lows. Then immediately they set always like that, making quick moves. Then you think that, okay, the trend is our friend and it is being set. Take position in a huge quantity, they simply trap you. Then more side, USDN will revisit 1.121. Yes, 121. They will definitely go. 110, they will not go, sir. They will hold around that of 116, 115 probably they may show, but they are expected to take USD yen along with that of euro and GBP as a contrarian move. See, now you have seen the contrarian move on the downside. When euro and GBP are dropped, USD yen has also dropped. And if they want to handle yen crosses, then when euro and GBP are rising, they have to rise USDN as well as USD Then only you will find the mixed moves happen in the market, and the players are able to continuously confuse the traders and make them to speculate, make them to become technical analysts, and later on lose money. Then another question, Miglion. What is your view on New Zealand dollar CAD? I'm not tracking these commodity crosses much, sir. Probably I'll review it and tell you later on during the next webinar time. It is almost time. Okay. So I take this opportunity to thank FX Trade for the facilities provided and you people for your kind visit and listening to the webinar. And if you are really benefited, tell other people about the forecast which is given so that they can also enjoy the benefit. Thank you one and all. Wish you all happy trading.